Hey guys, this is the Sherpa here with you. I've made a post today and it contains a lesson, and I wanted to show it to everybody out here. This is the way to manage around either what's a bad trade, or in this case, it's just a sell-off trade on a stock that I still like. And I want you to stay in as well, but I want to give you all four options, five options of what you can do. And this is how you make money like the real traders and continue on without selling out a stock that has a short loss and then pops back up like I did with Nvidia back in 2006 or 7 when it was at, I'm sorry, 12 or 13 when it was at $10. So let's take a look here. This is going to be on yesterday's trade. You would know what this is if you are a subscriber of the Everbullish Substack. So please visit the Everbullish Substack. And this is my business. It's also a free subscription. But the premium is where you get all the trades. So this is how we work this. I am a professional day trader. I do this every day and have for the last 22 years. All right, so a stock that we've owned for a little while here is ACHR. ACHR is awesome. This is actually the misspelling of it. My goodness. No, that's right. It's ACHR. But it had a big fall yesterday. It turns out that there is a lawsuit coming down the pipe from one of the companies that is funding it. So I've mentioned this before, but this is what's called a direct listing. This is a company that does not IPO. So there's not going to be a day where an investment bank just puts it, and there's a CEO up there ringing a bell that says, hey, we're now on this blank exchange and the price is opening just like Facebook did, just like some of the more famous IPOs in the past. What this does is it issues warrants, and these warrants I've talked about as being a great way to up your return on stocks that are still lower valued, and often they're very experimental. But here's what we should do. So I've typed here, and I'll do this for anybody anytime if you're a customer, but that's a $20 a month, 200 a year on Substack. So no one should be in any trouble because we use sell limits. So first of all, I didn't lose any cash here. I have some in an IRA that I didn't have any protection on because I just know that it's going to be at least 2 to 3 years before I touch it. But I always tell you, and we always know, and I keep beating into your head, and I hope all of you did this because that way, we profited over probably what? It was up 23% in a month, so probably, I don't know, 12 to 15 on the minimum. Some of you guys, we've made more than that. But in all situations, remember, when we place a trade, I want you to put a trailing stop limit order on it, and I want you to use the percentage. When we use the percentage, this number is not something I can determine for you. I keep mine at around 10%. Some people want to keep them at around 5%. But if there's a bad day and you get sold out, you got to remember to put an alert back in to see if it continues to drop, and then you can buy it back. That's the way to operate this. And also, the more volatile a stock is, the wider you want those limits to be. And you've always seen a lot of the posts that I put out in the videos of once the stock is run up, let's say I had a 10% stop loss and now it's up and it never hit that loss from my purchase price. It's up 23%. Oftentimes I'll send out an email, but I need you to get used to doing this on your own. Change that order, go in and edit that order to sell that limit order, that trailing stop limit order to be 3% down. All right, so now you just leveled up with no chance of going down, right? So first of all, we shouldn't have any problems when a stock does this if we're doing it the right way. And this is for the people that may not have done that, or the people on the internet that are just genuinely not knowledgeable enough to know how to do this. So we're still at a 52-week range, by the way, on the higher side of it. It was just a nasty day range fall. And then here's our limit. Here's our 3 months again. So 38% in 3 months. It's been about 2.5 since I touted this, so we're probably right around down here somewhere. But obviously, this is a stock that's going to drop. This was posted again today when the volume was still pretty low. What I like to watch here is this volume. If today this volume ended up above the red, and particularly if it ended up a lot above the red, these two previous reds, even if it was down, but that volume was higher, that's still an immediate buy. And just a little lesson there. So here's what I discussed to you guys. You'll have to go to the website to read it, or the Substack that is to read it. But this is about the trailing stop losses. Option, number one is if you're this is going to be less risky to more risky feeling investors. Really, if you're trading this and would do this, it's probably not the best stock to be trading just for you. But so what we have here is we have sell it for peace of mind. If you look at the chart above here, see how we have well, I didn't include RSI, but RSI, we always want that to be below 30 when we buy a stock. It's already at 30. So that's why I say probably hold it, but if you're afraid, sell it. We'll definitely be able to buy it again at some point very near the price that it's at. And that's really how we make money trading, right? The more you sell stocks, the typically the really and truly, if you sell more than you buy, and you follow my method, you're going to be up multiple tens of percents, 30, 40, 50% in a year. So do that. But you can always sell it. And if you did that, and if you haven't done anything and you're still at a loss on this thing, put a limit in right now at 10% trailing right now. So that's number two. That's going, all right, instead of me having to watch this every day, instead of me having to ask Chase for what's going on, instead of me having to do any of my real research about the technicals, you just put a 10% sell stop on it today at a trailing 10%. And that just means that when I put this out, funny enough, that just means that it will sell out if it continues to drop below the price you put the order in at. But when I put this out on here, you could see that the price was down 8%. By the time I got done writing this article, the price was only down 5%. So your trailing stop loss would actually be -7 at this point, just in one, less than a half an hour of one day. Okay. For buyers that want to hold this over 3 to 6 months long term, do what I do and just put it in your open it, make a trade in your IRA to own it, and then in your trading account, if you have it, get rid of it, and you'll just swap the two, and you'll also have a capital loss, right? The option trade. I'm doing a lot more option lessons for you all because it seems to be that a lot more people are getting interested in them. And I am an expert on this, and I have taught a lot of people, and I'm the man to follow. The reason I haven't had this much on there is that in the past, while I was growing this channel and I was growing my reader base on Substack, people weren't following it. Like, they were interested in reading it, but they wouldn't do anything, and no one was into not making money, and I was spending a lot of time. So one of the things you can do is sell half of your position. You had 100 G's in the stock, and now it's down to 90 or whatever has happened, probably 85 over the last 2 days. Sell half of that, sell 40 G's off, and then use that to to buy puts for the same amount of time. In this case, I said 6 weeks to 3 months for a swing trade, roughly. That's kind of what we want to keep in our heads. Just buy puts on this stock. What that means is that if the stock continues goes down, you're hedged. You will not lose. You'll be making money in those puts. And then if the stock goes up, obviously you won't cash your puts, but now you've already made money in the actual price of the stock going up. This is what hedge funds do. This is called hedging. If you're a paid subscriber, I show you how to do this anytime on my own time for free. It just comes with the deal. And then here's the charts on exactly how it's going to look. This is for you. And then this is a chart that I usually keep for myself. But keep this chart. You can open it, expand it, and then save image and put this in your trading folder online. But this is just an easy way to remember what you should do if you're going to use options without having to know every intricate detail. With calls, the strike price plus the premium is break even. With puts, it's the opposite. And then the same for the bottom here. So you can either buy calls or sell calls. You can either buy puts or sell puts. In this case, we're buying puts. So we expect it to either stay flat or go up. And in that case, we're just very easily making cash on both sides to keep it stable until we figure out the direction of this, and we don't have to take a capital loss. Okay, otherwise, I got some other stuff in here for you. You got to go pay to subscribe and see the rest of these things. And don't forget, I sell portfolios on my website. They kick the shit out of the market, and we're the best there is. And it's to your credit for following. So thanks. Let's get rich. Enjoy yourself tonight. I'll put out another one tomorrow.